Dear Chartered Accountants, working professionals and students in the domains of Indian auditing, accounting and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant. Daily news and updates for 12th August 2023. The CBDT has extended the applicability of Rule 10D subsection 1 and Rule 10 subsection 2A of the IT Rules 1962. Which are the transfer pricing safe harbour rules, until the assessment year 23-24. This means that taxpayers can continue to use the TP Safe Harbour Rules to determine the arm's length price of eligible international transactions for assessment year 23-24. The transfer pricing safe harbour rules are a set of rules that provide certainty to taxpayers in relation to transfer pricing. They specify a list of eligible international transactions for which the transfer price declared by the assessee will be accepted by the income tax authorities, provided the transaction meets certain conditions. The SEBI has notified an amendment to the SEBI Settlement Proceedings Regulations 2018. A new Regulation 2A has been inserted in Regulation 23, which pertains to the settlement of proceedings before the adjudicating officer and the board. As per the amendment, the panel of whole-time members is now required to dispose of specified proceedings that have been initiated or proposed to be initiated on the basis of approved settlement terms. This amendment shall come into force with effect from 17 January 2023. SEBI has reduced the timeline for listing shares in public issues from existing T+6 days to T+3 days. Accordingly, SEBI has issued revised timelines for listing specified securities and various activities involved in public issue process. The T+3 listing timeline must be disclosed in offer documents for public issues. The circular shall be applicable on a voluntary basis for public issues opening on or after 1st September 2023, and it will become mandatory for public issues opening on or after 1st December 2023. RBI, via press release dated August 10, 2023, has introduced a statement on various developmental and regulatory policies relating to four categories. Category 1, Financial Markets. Category 2, Regulation and Supervision. Category 3, Payment Systems. And Category 4, FinTech. The proposal aims to promote stability and sustainability in the financial ecosystem. The key proposals as laid down in the Statement on Developmental and Regulatory Policies are as follows. Proposal number 1. Introduce a secured AI-driven conversational payments mechanism on the UPI platform. UPI, with its ease of usage, safety, security and real-time feature, has transformed the digital payment ecosystem in India. As AI is becoming increasingly integrated into the digital economy, conversational instructions hold immense potential in enhancing the ease of use and consequently the reach of the UPI system. Therefore, the RBI has proposed to launch an innovative payment mode which is conversational payments on UPI. This mode will enable users to engage in conversation with an AI-powered system to initiate and complete transactions in a safe and secure environment. In my opinion, this move from RBI will further strengthen India's dominance in the digital financial ecosystem space compared to other countries across the world. According to recent research reports, 50% of venture capital investors hold a positive outlook on the revival of startup funding in the next 6 to 12 months, while 17% expect the resurgence to occur much sooner. The rest of the venture capital investors are of the opinion that it would take 12 to 18 months or more for the funding winter to pass. On this matter, my personal opinion is in line with the latter category of venture capital investors who expect it would take 12 to 18 months or more for the funding winter to pass. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.